Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Bets on more aggressive monetary easing are growing across several advanced economies, with central banks like the Bank of England and the European Central Bank signaling potential rate cuts. Meanwhile, the Bank of Japan is only one of those standing out for considering a rate hike, diverging from its global counterparts. In the US, the ISM services PMI surged to 54.9 in September, showing the strongest growth in the services sector since February 2023. However, the job market continues to show signs of weakening, with jobless claims rising to 225,000 and job cuts in September totaling to 72,000, which is all higher than the previous numbers. Good morning, JK. We had one round of job market data. What's your take ahead of the crucial NFP and unemployment rate, which will be released today?
Hey, good morning, Swaraj. Yes, but now actually geopolitics has overshadowed everything else for the markets amid a surfeit of uncertainty as to what happens next. The build-up has been quite unnerving after Iran has got directly involved through though a much lesser degree than market had feared. Now, the world is monitoring Middle East news after Israel and US vote to strike back after Iran attacked Israel on Tuesday. However, the extent to which US will support Israel attack is the factor that we are watching. US obviously does not want Israel to attack the nuclear facilities in Israel, but they would be backing them to attack the oil facilities. So the next escalation level would be if US gets involved directly by deploying its forces. It's a huge diplomatic strategy for US, as the chances of US refusing to back Israel in a crisis will be further minimized by the fact that US presidential election is less than a month away. US administration also does not want to, in any case, to see as if they are going soft on Iran. So what US will do will be a big question. And at the same time, it does appear that Israel may not be so much shy of taking a decision on its own without even if US does not support it. So these are the risks that the market is running, huge risk, and we have already seen much big market moves in terms of the oil price and also the stock markets taking some hit in some of the regions. India, one of them. So I think particularly with the weekend coming up, the developments will be watched very closely. Of course, in the circumstances, it is no surprise that dollar has remained well bid, and economic data yesterday has further supported it. While jobless claims rose by 5,000 after falling 2 prior weeks, but that may have something to do with the Hurricane Helene effect that had hit US last week. ISM services was a blockbuster, coming at 54.9 versus 51.6 previous and 51.7 expected. It matters a lot. The services constitutes 85% of the US GDP. While the employment index was down, prices paid had hints of fresh inflationary trend, coming at 59.4 versus 56.3 expected. The number assumes importance as we have threat of price pressures building due to the oil price hike. There are some rumors that President Biden has suggested US officials are considering a support to Israel's strike on Iran oil facilities, and that may be a big threat to inflation coming back in a big way. So there was quite some rise in US yields by 2 cent tenths by 7 bps, and both of them are now at 1 month highs. That is the level seen before Fed rate decision. US employment data, no doubt, is on the radar today, and there are signs that the employment might be recovering, but it's quite mixed actually. We had the job openings higher. At the same time, The quits were also lower, which means people are not leaving jobs easily with confidence. The ADP number was much better than expected, and today's number at 1,40,000 NFP and employment number, or rather unemployment number at 4.2% will be taken quite neutrally by the market. Now, for currencies, though Europe had a better services PMI also, the rate cut prospects in the October has weighed on it and taken it further to test 1.10, but that has held so far. The currencies that had been an outperformer this year after yen had a bad day after BOE chief Bailey made dovish comments on inflation and interest rates, saying that the central bank could move on rates aggressively to cut rates if inflation pressures continue to weaken. Selling fell below 1.31, with some believing that eventually BOE will match ECB and Fed in rate cuts. Obviously, yen still felt the impact of the Ishida U-turn on monetary policy, and the current risk of environment and geopolitical intentions. I think they are unlikely to change anything in the rates. However, yen has also failed to act as a safe haven in this year. As far as rupee is concerned, it was the fourth session of fall in a row, hitting near its all-time low of 83.98. Huge buying from FII banks reported, and we had somewhat of a tremendous amount of outflows, almost 4 billion in the last 3 days. Yesterday was a massive 15,000 crores of outflow from FIS. And as we have always said, the rupee moves will always depend on the dollar index and flows, and that is the guiding force, and that is the a point which the RBI also observes. Irrespective of the view, the flows will determine the INR moves, and the flows have been negative for the rupee in the last 4 days, and that has guided the rupee to its lowest level. Yesterday, we have seen the big number from the NSE data, and that can probably have an impact. But as I've been saying, 84 is not likely to break easily, and the central bank is likely to continue to defend the same unless the war takes a next level of escalation. So until then, but any return to strength in rupee will take some time, definitely. Thank you.
Thank you, Jack. Just quickly summarizing, the geopolitical developments are continuously in the limelight, and the world is constantly monitoring the extent of the US support now in the Israel war. Dollar has remained in demand, and economic data is supportive. ISM services printed a solid number, even as services contribute more than 80% in the US economy. Jobless claims, though weaker, may have seen some uptick due to the recent hurricane in the US. NFP and unemployment rate will be closely watched today. For currencies, euro has continuously lost out to the dollar, and BOE chief made a very dovish statement, resulting in a strong sell-off in the sterling. For rupee, we continue to fall towards the all-time lows of 83.98, and a lot of FII outflows yesterday amounting to rupees 15,000 crores. So not a very good day for investors. But that's it from us today. Thanks for listening. Have a very good weekend and tune in on Monday for the latest in the financial markets.